Ryan here with Portfolio Constructs. Today I'm going to walk you through my thought process that I go through when deciding whether or not I want to invest in an ETF. I'll give you a little overview of what features I look into when I'm investigating one and how I make my decision about which ETFs I'm going to purchase. Now let's get right into it. Alright, here I am on Fidelity.com. You can really do this type of research on any major brokerage website, but I use Fidelity, so that's the one I'm going to show you today. So I have pulled up here IVV, which is the iShares S&P 500 ETF. So we're going to walk through the things that I'll look at on this general overview of this ETF and kind of what they tell you and what you might want to pay attention to. So up here on the top right, we see net expense ratio. That's really one of the most important things, in my opinion, when looking at an ETF. And once you start looking at more of these securities, you're going to get more of a feel for what is actually a good ETF, or what is a good expense ratio. And here for this one, we see 0.03%. That is pretty amazing. You're very rarely going to see anything that low, and this one is just that low because it's one of the largest ETFs that exists. They have such a large market cap that they're able to charge such a small amount because of the outstanding size of the assets under this ETF. Anyways, let's keep going. One thing that you could pay attention to is a lot of these ETFs will have Morningstar reports, or there's some other ones, and they'll get a rating from that. Here we see Morningstar gave this 5 stars out of 5. Sometimes these ratings can be in line with my thought process, where I do think this is one of the best ETFs that exists, so I would agree that Morningstar gave it 5 out of 5 stars, but there's other times where I see ETFs that I'm really not interested in, and Morningstar might give it an awesome 5 out of 5 rating, or vice versa. I see an ETF I really like, and they'll give it a 2 out of 5 stars, so, take that rating with a grain of salt, I would say. Another thing that you can look at is in this section, what is it holding? So this is going to give you a more general overview of what is actually making up this ETF, what securities are in there. We can see in this top 10 section that Apple is actually 6.35% of this ETF. And now the reason that Apple is that way is because this ETF is essentially copying the S&P 500 index. So if the real S&P 500 index is composed of 6.35% Apple stock, then this ETF will try to match that as close to exactly as possible. And the S&P 500 index in general is a market capitalization weighted index. So what this tells us is that in real life, the value of Apple as a company is essentially 6.35% of the entire top 500 publicly traded companies in the entire United States. So that's essentially what that means. We can see rounding out the top 5 is Microsoft, Amazon, Facebook, and Alphabet, who owns Google. And we can also see some regional exposure information. Now, this is kind of pointless for an S&P 500 ETF because just by the nature of it, these companies should all be in the United States. I'm actually curious as to where this 0.89% from Europe comes from. That's pretty interesting. So yeah, this is not going to be as useful for a company-specific or a country-specific ETF, but there's a lot of ETFs that span across different countries. That would be more useful to look at. This market capitalization is going to be pretty useful too. So here we see in the S&P 500 index is about 84% large cap weighted stocks and 15.93% mid cap. So because we're looking at the S&P 500 index, which is essentially the 500 largest publicly traded companies in the US, you would expect this index to be almost all large cap stocks. There's a lot of different ETFs though that are spread across different market capitalization weights. So one thing to keep in mind is generally the smaller the capitalization, the higher the return expectations, but also the higher the risk expectations. So going for micro or small cap or even mid cap stocks, you're going to expect higher returns, but it also is a more risky investment. You'll expect more volatility with an ETF that has more weight towards the smaller companies. So just something to keep in mind. Then we can also look at this sector exposure. This just tells you, of the companies in this index, what percentage of them are in each of these different industries, right? So we can see in the S&P 500 index, actually, the largest component of this entire index is information technology companies, making up about 27.48%. Now that is pretty substantial, and it's actually not surprising because we can see up here that the 5 largest companies by market cap weight in the S&P 500 ETF or S&P 500 index are all IT companies. So that really is not all that much of a surprise. And then we can see second is healthcare companies and consumer discretionary, and it just goes down the list like that. One thing I want to show you is a peer comparison. So down here we can see a listing of similar ETFs. So we have this, here's the one that we're actually looking at, IVV. But then these are going to be the main competitors of that ETF next to it. So Vanguard S&P 500 ETF, and then SPY, which is the Spider ETF Trust, that is the biggest one. So this is going to be really useful information because if you know you're interested in, let's say, an S&P 500 ETF, and you already know that's what you want to buy, then you're really going to be interested in, okay, which of the S&P 500 ETFs am I most interested in buying? And this is where you're going to see the information that is going to be probably most important to do this sort of comparison. So I just clicked into more information. Let's look at these things side by side. So there's maybe 3 things that I think are the most important here to me. Net expense ratio is the thing that I usually look at the closest. We can see with IVV, it's at 0.03%. And then with VOO, it's also at 0.03%. And then SPY, we have closer to 0.1%. And so net expense ratio is just how much you'll be charged per year for owning this stock from the issuer. So the issuer puts all these shares together, and they're going to have to essentially make their money somehow for offering the service, and that comes through the way of the expense ratio. So if the expense ratio is 0.03%, let's say you hold $1,000 of this ETF for 1 year, how much are you paying the issuer of this ETF for that 0.03%? I'm going to pull up a calculator and show you. So you're going to take that 0.003, that's 0.03%. Actually, it would be 0.0003 and multiply it by your $1,000 of that ETF. And you are essentially going to pay them, I divided, my bad, 0.0003 times 1,000. Pay them 30 cents for the entire year for their service of essentially offering and piecing all these stocks together there to offer this ETF, which is almost nothing. Another important thing you're going to want to look at is the tracking error. Now this is essentially how close to the actual index is this ETF in terms of their tracking the performance in terms of returns. You want a lower tracking error. We see with IVV that it has the lowest tracking error of any of these ETFs by quite a bit. So I'm looking at this, I see IVV has the lowest net expense ratio and the lowest tracking error, so I'm going to be favorable to that ETF out of all of these 5 that I'm seeing here. Another thing you might want to look at is the market capitalization, or essentially the size of this ETF. Here we can see the volume, so I think this is how many shares of this ETF are traded on a daily basis. And so this is something that is important. It's basically telling you how easily can you sell or buy this ETF. So if the higher the volume, when you place an order to buy or sell, the faster it will execute and the more liquid this ETF is. For most people who are watching this video, if you're just, trying to buy a handful of shares, this probably isn't really going to matter because you are not moving the market enough to the point where you care all that much about the liquidity of most of these ETFs, because most of them for small order sizes will trade in under a second. Now, if you have a larger portfolio and let's say you actually wanted to buy or sell like $1 million of one of these ETFs, then you would absolutely care more about liquidity. Okay. Yeah, so these are just a few of the things that I look at when deciding whether or not I want to purchase an ETF. There's a lot more, there's a lot deeper rabbit holes you can go into, but I think these are probably the most important things that I've actually covered today. Yeah, so if you like this video, subscribe to the channel for more content just like this and drop us a like. Thank you.